What is going on, guys, and welcome on into the stream. Welcome on, and we're going live here to finish out the day here on Tuesday, February 22nd, 2022. So we got another one of those days, right? We have some wild action actually right now. Biden, I think, is speaking or just finished speaking actually as we speak, as we go live right now. On the Ukraine issue, I can cover some of the points, but essentially nothing really new there. He started off by saying that, Russia has begun an invasion of the Ukraine. Some of the sanctions are beginning now, whatnot, that they can avoid the worst case scenario. It's not like it's too late for that. It can obviously, things can diminish. And they're monitoring, energy supplies, all that stuff, kind of the stuff we already know, but he kind of had to come on and say that stuff. And they will judge Russia by their actions, not their words, because they don't believe him, they don't trust him, and all that stuff. And Putin might say one thing, but do something else. And it's kind of the deal. We kind of really, pretty much the stuff we kind of already know. So that's what's going on there. But the market, I guess, kind of took that in a positive way, a little bit of a volatility move. Pretty hard sell-off in anticipation of Biden speaking. Really, that kind of happened from about noon through like 2 p.m. We had a pretty decent sell-off. The market pulled back pretty much to those lows, over 1.5%. We were actually barely green, and then we got rejected. It's kind of funny. These lines are literally working perfectly here. That we have literally on SPY, literally just working like absolutely amazingly. I just took a trade on not here in my Robinhood actually, just for fun, off of this, which I like this level. I was just kind of tied up. I have cash positioned for other longer dated time frames and other stuff. In this portfolio, but I took one in the Robin and I had some free cash there, and right off this level, boom, beautiful. It was like a 40% or like that. I mean, I played this week's expiration, so it was nice. And why was this level right here down towards 426 a key level? Broadening things out. That was our zone. That was our low that we saw back here in October. Also lines up pretty close with some of these wicks down that we saw a few weeks ago. So I charted it out the past couple of weeks. It's been there for a while. You guys can go back in videos and see that line's been there for a while now. And below that, I was looking down towards about 421 or so was my next level. If we got, a bigger sell-off after Biden spoke, who knows, right? But we didn't get that low. We got down to that 426. So we haven't gone lower than the lows that we saw a few weeks back. We got down into that range. We haven't gone lower. We'll see if we close below 430. We have not closed below 430 this year. You got to go back to October to close below 430 on SPY, I believe. So that's kind of a level that it's been an interesting spot to watch. There are some things I am noticing though, for sure though, is that we have been definitely noticing certain things holding up better than others. Roku, for whatever reason, not for whatever reason, but Roku today looks like Kathy Wood's been buying a lot because she's been holding this thing up herself. It seems like, right? It's one of her stocks, and look at this thing over the past couple of months, hit 490, pulled back down to pretty much $100, right? This thing dropped down. Let's go the 5-minute chart here. We fell to 102.60 Friday after the earnings. Now it popped up, hit today up to 127.23. I actually drew a line there because that was the initial spike down bounce area, 126 or so. So we got kind of up there. Could have been a short there if I was on it, but that's the level that I had drawn. And it's kind of in between, so it looks like it's been pretty strong. So I wouldn't want to fight it to the downside here. But yeah, maybe she's buying a lot. Who knows? Whatever's holding it up, and it's doing pretty well today. It's kind of pushing back up into that gap. So we'll see how that plays out, but. Overall, though, SPY, we're looking at that 430 today. I'm seeing if we close below that, that would be, notice a notable close below the lows that we saw, in terms of a close below, the lowest we've seen in a while. We closed here on, this is the 27th. We closed at 431, like 25 or so. So honestly, below that would be technically the lowest close we've seen this year on SPY. If it does end up, staying weak into the close, we'll see if we get there, how that plays out. But bouncing off 426 or so right now, up about, $2-3 off those lows from today. So, a little bit of at least some more of a bounce, some more buyers coming in after Biden spoke. It's kind of funny though, honestly, if you think about it, we didn't get back up to where we were I guess, we bounced a good bit, but it was kind of one of those just sell-offs. Everyone's like worried, what's he going to say? And then he says whatever he says, which, is kind of the same thing we pretty much know. It's not like there's any breaking news there. And then just, okay, market kind of bounces a little bit. But again, though, we have been noticing these lower highs overall. Bigger picture view, though, we have this line here at 435 on SPY. That was the low of last Monday that we got down to. So now that's acting as resistance right now on SPY. So we got there this morning, and now we couldn't break it. We kind of got close, tried to, but couldn't really break through, and fell right back off. It would have been a really good short opportunity there this morning. So we'll see what happens. I'm loving this. Can't wait to try at the bottom. Exactly. You never, who the heck knows? But if you get a good chunk, exactly, that's going to be sick. If you get a good chunk at the bottom, you'll make a lot of money. If you get a good chunk off of, if you can get kind of close, you don't have to get to the bottom, but you get kind of close, you're going to make good money. What I want to say though is look at SPY's down about 1.25%, IWM down about the same amount. I'm kind of surprised it's holding up this well. Now, bigger picture view, it's not really holding up. It's still down the past 3 days in a row, but we did have this level right here at 195 is kind of where I'm looking at. I'll draw a line there. 195 is kind of that level that we held up a couple weeks back off the lows, bounced, pulled back, hit 195, and then bounced from there. So if we hold up 195 on IWM, that would be at least a good sign, but it did get rejected right off of that area of resistance, prior support, new resistance there. I will note that XBI, where's XBI? XBI is green today. This is interesting. I think what at least I'm noticing more of, it seems like now it's roughly even. Now it's red, now it's green. It's like it's pretty much flat. So now it's green by 2 cents. XBI is holding up a lot better than I would expect. I would think that especially biotechs would get hit. But what we're seeing is clearly a transition away from the selling pressure in some of these things, and so the selling pressure in some of these stocks that were really, really destroyed. And like, for example, a lot of small caps, biotechs, these things got crushed. I mean, look at the weekly chart here I'll go to the daily chart on this thing. XBI from its highs. Now, okay, from its highs, it's not the best. It's not the best way to look at it from the highs. I understand, but from the highs, it was down over 50%. Okay, over 50%. Now, go back to November. I'd say it's probably a better representation to go back to November. Go back to November, okay? Those, just to now, we're down to 34%. This is an ETF. This is not a stock. This is not a one stock fits all. Like, it's not like, Roku, they had bad earnings. Like, the stock had bad earnings. It is what it is. No. This is an ETF. They have like hundreds of stocks in this thing, the biotechs, but they're not getting killed as much. We went down to the lows pretty much on the S&P. NASDAQ went below us. I think the NASDAQ went below. Let's take a look at the NASDAQ. Pretty much right into that same zone. Pretty much right to the lows on the NASDAQ. S&P, pretty much right to the lows. But we didn't see that on XBI. Now it got, it's down. It's not that far away, but it still had, about $5-6 off the lows, which is, a decent amount from where it was, right? So this thing to the lows is still about 5-6% away, which is still impressive for it to hold up that, at least the way that it has been, relative to what we've been seeing, just because it's been one that was getting, markets down 1%, it's down 2 or 3 every day, right? That's what we've been watching. That's what we've been noticing. So it's something I've been, really noticing that. So I think, again, the same thing with I've been saying, right, is this is going to have a really good bounce, and it should be very, very strong, in my opinion, if the market firms up. And we've been waiting for the market to firm up, and it hasn't. So that's just been, what it's been doing. Same thing with Jets. Let's take a look at Jets here. It's down 2% today, so it's down a good bit. But relatively speaking, compared to the S&P chart, this is holding up so much better than the S&P. So same thing here. I think these are going to be some more stocks, airline stocks, travel stocks. A lot of actually hotels have been doing pretty well. Believe it or not, H for Hyatt is at 99. That's actually coming down to a spot that I kind of like there too, versus 97 on Hyatt. It could be a good risk reward trade there. But a lot of these things have held up so much better than the S&P. So, when the S&P bounces, or if it firms up and stabilizes, then, will those stocks, I would imagine some of those stocks have very, very strong bounces or have very, very strong continuation moves if they've been holding up decently over the past couple of weeks. So we'll see though. Let's go back and check something here. Oh yeah, INDO, a lower flow energy play. This is an interesting one, holding up pretty well, to be honest, today. And it's been kind of putting in higher lows all afternoon, really, after hitting down towards just under $7, hit up to nearly 9. So we're getting some momentum back in small cap land, as much as it sounds like, or it feels like, none of these things are moving. IMPP, look at that. That's another one, another oil and gas play. Oil's been pushing up as well. We can take a look at Exxon Mobil and Crude Oil in a second. We have the two top gainers today are 50 plus percenters, which is great. One's around 75, one's at 60. That's pretty good. We haven't really seen, honestly, we started to get some action last week in some of these types of movers on the top gainers on the right-hand side, but really it hasn't been that great, past couple weeks. Let me just share this on Twitter really quick. Going live right now till close. Till stock market close. So let's take a look. I wanted to pull up some of the news too and see if we got any headlines going down from, what's it called? Delta One. So we can see how, at least, if there's anything additional that's going on. All right, this is a cool chart. We can talk about this in a second too. We might as well just pull it up now. It's up. I've talked about Ryan Detrick before. He's a great follow on Twitter. He's on CNBC a bunch. He comes in here and there, does a lot of different stuff. But I posted some really cool graphics here. So let's take a look at some of this. How do stocks do after major events? Now, again, right? How major is this event going to end up being in the history, right? In the history books, who knows how this plays out? We have no idea. It really will take a lot longer to figure out. But this doesn't account for like only wars. It's just, it gives you some examples of wars. Some things like, for example, we have, I believe in here, 9/11 is in there. We have, what else do we have? Trade Center bomb. Yeah, that was the same. First World Trade Center bomb. 1993, market actually did pretty well after that. Some of these are just bigger, like, I guess, world or US events. Germany invades France. We saw some big moves back in 1940 to the downside. That was a pretty substantial move to the downside at that point. But it's kind of cool just to see some of this and just to kind of get a feel for, historically speaking, what we generally see after some major events. And honestly, history tells us that, to be honest, war isn't the worst thing for the stock market, just historically speaking. And this is actually a really cool stat too from World War II. The Dow was actually up 50%, 7% plus per year on average. During the two worst wars, the market was up a combined 115%. So that's pretty impressive, to be honest. But a lot of the fear comes in, or a lot of the downside was early on, and then you have bounce backs. So and sometimes people are talking about how, wait a second, now you have, I'll pull it up too. The idea is now you have, let me go to my profile. I think I retweeted it too earlier today. Yeah, this right here. Russia-Ukraine crisis could force a reassessment of the Fed tightening path, resulting in central banks turning less hawkish, while policymakers may consider additional fiscal stimulus, which would be bullish for the markets. So that narrative potentially starts to get run here. And so we'll see how this plays out. But that pop up this morning, the market was actually going green relatively, not off of that news. It wasn't like that was, I guess, a big piece of news, but relatively around that time, people started, talking about that and like, hey, this is actually a possibility. All right, crude oil futures settled here at 92.35. So crude oil is pushing up towards $100. Biden says diplomacy is still available. So this is all after, talking about Biden and his little speech he had a few minutes ago. And then pretty much left off saying that they're going to judge Russia based on their actions. I don't think he took any questions either. He said no questions or something. Based on their actions, not their words. Because, again, the same thing, right, with how that's been playing out. They say one thing and they do something else, is what it seems like. Yeah, but nothing else there. We'll jump back to this and see if there's any more updates and news-wise and stuff like that. So we shall see how that plays out. How's SPY doing? SPY 428. Yeah, it's honestly, it put this bottom in here, it dipped just under 426. Then it popped up here to 429.50, and now it's pulled back a little bit. Now it's building a higher low right now, and so let's see if it goes for a higher. VWAP is up here towards 430, 431. I would expect if we do keep pushing up, that would be probably an area of resistance to watch out for. Up there towards a little over 430. We'll see how that goes, though. Did I do anything today? Honestly, no, I didn't do anything. I haven't touched. I didn't add to UVXY. I probably could have. I have a UVXY put out to March 18th. This is coming down pretty hard. I really should have ideally snagged another one of those before the Biden speech when the market was coming in. But look at this, UVXY, look at that candle. Boom, that just got, that's a melt and a half on UVXY. That's sucking the volatility right out of the market. It's a little bit to some degree. So look at that. That's a big move down. So I have a put, 16 strike So it's not the best. Ideally, on something like this, I honestly kind of like these types of stocks or these types of plays. Like, obviously, it's not a stock. UVXY isn't like a company, right? It's just measuring volatility. So if things get volatile, people get scared, market sells off rapidly, this pops up. Generally speaking, this goes down when the market goes up. Generally speaking, there are times throughout history where you'll see UVXY start to kind of inch up while the market's kind of going to new highs. And that's generally kind of a sign of like, wait, people are expecting something to happen. Like they're, it's too good, too fast, kind of one of those type of situations. Things are just too good. And you kind of get that speculation of like UVXY, there's got to be some volatility coming. That happens sometimes. It happened a couple months ago, actually, if I'm not mistaken. So not the perfect correlation. But yeah, these are fun. If you trade out of the money options, it's kind of risk. Obviously, I need a big move down in UVXY to make a lot of money on my position. Like I need UVXY to go to 13 for me to essentially break even by that March date. So that's a big move down. But if it gets down to 15 this week or next week, yeah, there's still a lot of time on it. I'll probably be up and I'll probably just take profits. So you can play like a $20 put if you were to play that. Now, if you go to a $20 put right now out to March, let's just look at that. It's going to run you about $5 to $6. So the reason why I like this is because your delta on this, where's your delta? It's at 0.5. So for every $1 move down in UVXY, your put, a $20 put out to March would go up 50 cents. So you kind of get a better, correlation there. For example, my puts, we have a delta of 0.35, negative 0.35. So every $1 move in UVXY, these are only going to move 35 cents, which is like, okay, but like, it's not really it's not going to really move the needle on this option position. So it's really, I probably could have gone much heavier on it because it's not going to move the needle unless I get a massive move in a very relatively short period of time. So we'll see. S&P here is actually just barely touched VWAP. It got right up to that 430 and 50 cents, and then it pulled back a little bit now. Let's see, though. Good afternoon from DC. Thoughts on DWAC puts? I honestly like I said, DWAC. The problem here, though, what's it doing? It's at 92. The problem is the momentum on this thing. So I would say that I think this is going to be a massive short opportunity. I still think it is at some point. I just wouldn't want to fight the momentum. So right now, here's your trend line. Really, when the trend line cracks, this has massive downside, in my opinion. It's similar to the likes of, like a Lucid situation, very similar to some of the SPACs we saw, a year or 2 years ago, very similar to Rivian, in my opinion, right? Where the thing gets a lot of hype and then eventually when valuation kind of starts to come into play and the hype starts to fade out, then this thing could easily melt down for quite some time. But then you're also fighting right now, do you want to short DWAC right now when the market potentially could be bottoming for in the short term and bounce back strong? And then you'll have a strong market. You'll have people who, have been trading the momentum here, and that could feed more momentum. So I'm not a huge fan of trying to fight that with any heavy size. Although this trend line cracks, I think this thing is coming down, and it could come down in a big way. I would personally would much rather just short shares if you can get any shares available. For example, like you can't short on Webull. So we'll see. Ideally, I would look to a different brokerage platform to see if I could short shares and just short shares and not have to worry about options in the time frame of when I'm going to get the short and stuff. Eventually, I can almost guarantee this thing is going to be like a sub $50 stock eventually. And then who knows? The long term is a different story, but eventually in the relatively short term, next year or so, I can almost guarantee it's going to be a $50 or less stock. The problem is that you have options and you can have a time limit and you have premiums. And so you can end up being in a situation where you get that move, but you lose money, right? So, that's the only thing I would say. Be careful though, because this had a big move this morning, popped up hard, and now it's kind of holding up. It's kind of just building higher lows and it's just holding up. It's not telling me, hey, short right now, based off momentum. So until this thing breaks that trend, bigger picture trend here on the daily chart, until that trend breaks, I'm not really a big fan of that. Also, NVDA 235. Now, if we got more downside in the market, then yeah, I think that's going to be probably a solid play. this could definitely come down a lot more with the market being super red. If that's what happens in the next couple of months, I don't know. The next couple of weeks, but I mean, personally, I would say the market probably, I'd be much more inclined to say we're bouncing from here than we're going even lower. Nvidia puts, let's see where, and this is an interesting one too. Here's our downtrend. It's Nvidia. This thing is right here at the 200 SMA. Okay, this has been holding up pretty well. It has not closed. It closed once. If you get 2 closes in a row below the 200 SMA, that tells me we got some more downside coming. But that right now is roughly right at 230. So if we get 2 days in a row, we go below 230 and we close below 230 this week or next week, then that could be a very valid play. You also are coming up closer to your trend line. So I'd say a better short opportunity could be up here towards like 255, 250-ish on NVDA. Although this 200 SMA, man, I'm telling you, this has been a very strong stock the past year or 2 years. And it's bounced pretty nice off that 200 SMA almost every time it's tested it for a while. So that trend is going to hold until it doesn't. Obviously, eventually that's not going to work. And a lot of trends have been breaking down recently, so I understand the idea behind that. But again, this potentially could be a really good bounce zone for a possible breakout, as it's a stock that's been holding up so much better than a lot of other tech. It's been holding up a lot better. And if the market holds up, this could break out of this range and go back up to $300, very relatively short-term, move. So that's the only thing I would say about that. Want to go long at TQQ options right now. That is honestly, to be honest, I take QQQ is better. QQQ is probably a much better way to play that. If you want to go long, look at QQQ, by the way. It literally bounced at the exact same spot it bounced to like 3 weeks ago. Look at that. Almost to the cent. We hit 334.15 as the lows. We were 20 cents away. Within 20 cents on QQQ is the bounce we had today. That's pretty impressive. By the way, though, SPY just broke VWAP and it's going for more. Wow. I'm actually going to kind of check on what these are worth right now. I bought 430s. Do I have 430s? I bought 430s. Yeah, I did. 430 calls in the Robinhood at like 375, and they were up $100 within like 5 seconds or 5 minutes or something like that. Like they bounced super fast. So then I just sold them for $100, but they are now up, $200 off of where I had them, which is nice. If I had the diamond hands, I did buy something today. I bought Labu. I bought more Labu out to June. So I bought another one of these. I still am holding the March, to be honest, because I want to sell these, but I have 3 left, and I sold some up around $5, $4 per contract. I rebought some in upper ones. My average is at 2. I got 3, so I mean this is at 125 right now, and I really look at Labu's chart, by the way. I mean, look at this. I mean, it's obviously going strong with the market right now, but it's holding up so much better, biotechs, than the S&P. Look at XP. Here's XBI. Here's the biotech ETF. We're right up against the highs that we had this morning, very close to the highs of afternoon on Friday. So this could be some resistance up here towards about $90.50. So we'll see if we can blast through there. I don't expect that really into the close, although if the market finishes super strong, who knows? It very well could happen. But I'm holding those. I added one more out to June, just so I have more time on my side there, but I'm holding those. That's at least what I'm doing on the Labus. And ultimately, we're going to see how that plays out. But I mean, I wanted to give myself plenty of time. This, again, reason why I'm playing that way, here's XBI's chart. XBI, in my opinion, I think can really make a solid move, up to like 105, 110, the lows that we saw back here in December at a minimum. That could be a first target zone. Let me actually draw a line there and put that line in there. Double bottom we saw in December. So that could be the spot that I'm looking at. That is a spot that I'm looking at. And so if we get that, Labu is the 3X ETF, bull ETF, that would put you, roughly up around $30 per share. I got 20 calls. I got 20 calls out to June. Plenty of time for those to go. So if XBI made a move like that, then these would kill it. I mean, these would be massive. So I'm holding that. It's been strong in a very weak market. So it has shown some relative strength in a weaker market. So we'll see how it plays out, but that's what I'm doing that in terms of what I did today. That was it. I only added one of those. I didn't add anything else in terms of SPY calls or any of that stuff. I didn't add any UVXY puts, which I probably should have, but I didn't. No change to positions. Nothing's really going on there. I am looking at Save Spirit Air as honestly, if I was going to add back, it's probably not a terrible time to add back. I actually may get lower than where I sold. Let me see what these are going for. I sold these around 7 something. They're going between 705 and 760 right now. Yeah, I guess I probably could add them back lower if I wanted to, because I sold on the initial spike somewhere in the 7s. I forget. I can go back and look at the history and see when they had the rumor of the buyout from Frontier or the news of that. I sold into that 2 contracts, and then ideally I was like, okay, well, we'll probably pull back the next couple of days. Market's been weak, and I'll buy them back for cheaper, lower my average a little bit. But I never got the chance, and now we're right back into my average, so I probably could grab those again if we did see some more downside. I do like that play, although there is a gap on the chart, so I would like to see Spirit coming down. Honestly, sub 24 down towards like 23 or so would be a better spot to buy. However, if the market bounces here, it's very possible that we kind of hold this 24 as support and go back up from here, at least in the short term. And then we'll see how this Frontier deal goes, or if this actually gets approved and whatnot. Let's see. Oh yeah, I want to look at oil. Want to go long TQQ or 3x leverage? Okay, yeah, no, yeah, I would say that's probably a better way to go about it. Sorry, I got to that like late though, but I'd say it's probably a better way to go about it than options if you want to play that route. Careful on the swings of those things, because they do tend to, if you do the actual math on how those are calculated, swinging a 3x leverage ETF down or up or whatever actually is not. It doesn't work out the way you kind of envision it. It's not like a perfect like, okay, if this stock goes up 5% over the next 3 weeks, I'm going to make money. Not necessarily with how these 3x ETFs and stuff work. SoFi. So I do wonder where SoFi is these days. 10. Ooh, SoFi hit new lows today. Wow. SoFi 10.19, $10. I mean, that's the SPAC days, right? So you're back down to $10. Technically speaking, that could be your area of support, right? So it's bouncing off that level. I mean, it could go lower though. It can go lower. It definitely can. If the market stays weak, but these are some stocks. So, okay. SoFi is one of those to have on your list. Firm got destructed. Just look at a Firm, just absolute annihilation. This thing is destroyed. Hit 35.90 last week. Roku got killed. They had a strong day today. Roblox, RBLX is another one of those kind of. These are all stocks that could bounce back 100% in the next 6 months. If the market is okay, if the market, kind of has a decent next 6 months, these could bounce back 100%. SPY doesn't even have to go to all-time highs. SPY, if it does go to all-time highs, great. That'll help, but it doesn't even have to go to all-time highs. These could bounce back 100% in a stronger market. So these are some opportunities if the market does kind of, gather itself in the next couple of weeks. These are some very, very appealing spots. Penn is down today. It's not that bad. It says my options are down 15%, which seems like a lot for only being down. Because there's not much volume on these. It's giving me a price here of 882, but a last price, I guess. But the bid right now is 955 by a 990 ask, so it's actually about a dollar higher than that on those options. But Penn is setting up, honestly, the way I'm looking at Penn is it could be setting up as a nice inverse head and shoulders, I think, on this guy. Look at what I'm looking at here is an inverse head and shoulders. Okay, so if you want to look up what that is, if you don't know, quick Google search will give you a good idea, but where I can pull it up too. Here's kind of like your left shoulder almost, or your, I guess, inverse left shoulder, right? It's looking like it's opposite. Here's your head that was put in, back the lows in January. And potentially looking like we're trying to build that right shoulder right now. And if this bounces back through, your 52 level is your neckline for a big move back up. And I think we're going to go back in the 60s. So it could be setting up for a nice inverse head and shoulders there. We'll see. But, it held those lows, and it's actually held up much, much stronger than a lot of stocks over the past couple of months, past couple of weeks since those lows that we saw in January. Like, compare it to their counterpart DraftKings, and I think you can see why. You can see why DraftKings hit new lows after earnings. Now, Penn had earnings, and they held up actually pretty good. They actually went up off earnings. Market was super red that day, if I recall. So they popped hard on earnings, like 10%, and then sold back off a good bit after that. But their costs to acquire customers are not nearly as high, like not even close to DraftKings. And DraftKings is just spending money on, on acquiring customers, brand recognition, all that stuff, which is great, great potentially in the long term game. But right now, it looks like it's hurting them when it comes down to the balance sheets and all that stuff, and looking at your numbers and on your earnings. This has been a pretty impressive move on SPY. Look at this. We're back up. I feel like we always come to the situation where like you kind of get on and it's like, yeah, we're pretty red. It's one of those days, and we came on, we're down here. We're like, yeah, it's pretty red. And now we legitimately could go green today after being down almost 2%. I mean, how many days have we had like this? Or same thing with like we were green, now we're red. Like, it's been nuts, this volatility. It's been absolutely nuts. And I know it's been hurting a lot of people too. And I think one of the biggest things I have been preaching the past couple of days and weeks, really, there's no need to force something. If you don't like something, you don't feel super confident, you're worried, you don't have too much funds to toss in, there's no need to try to force something, right? The way I've been seeing it is, yeah, there's some little opportunities that I'll see and try to take advantage of and maybe make a few bucks or lose a few bucks, keep my risk pretty tight and stuff. But overall, I'm holding my bigger picture plays for bounce backs that I think we're going to have really nice moves in the next 3 to 6 months. Space earnings. I am not playing space earnings. They today or this week. Where is this stock at? $8. I mean, $8. It didn't hit a new low. It got close today. It didn't hit a new low. But 758. I can draw a line there. 758 is your low. Spin your area. I mean, wow, look at that. That's nuts. That comes down to the post SPAC days. It sold off down to about $7. So that could be a spot, actually. Post SPAC days were kind of a chart, at least some chart history there. The problem with some of these stocks, again, is like these SPACs, is that there's just not that much, like even like a SoFi, there's just not too much chart history down to some of these levels that you're getting down to. So it's like super risky of you're just kind of tossing money in and you're hoping and praying for a bounce. If you're not playing it technically speaking and you're just playing it based off fundamentals and you're playing it for the long term, then you're fine. Who cares? But if you're playing this stuff like off of like, okay, I think we're gonna get a bounce here, you have no idea. There's no chart history, there's no supports, there's no prior anything. And as we know, just like stocks go above. Look at here's space. Just like stocks go above, what everyone can believe in terms of valuation wise, it makes no sense. They can go down the same exact way, right? You can look at some stocks and say to yourself, well, how is this stock trading this low? Valuation wise, it just doesn't add up. Well, okay, did it add up? Did space add up when it was at 62? No, So you see we're literally seeing the exact opposite, the exact reversal of literally what was happening, a year ago. Literally to the date, like to this time a year ago, we topped on a lot of stocks. Like, look at this. Here's the top, literally early to mid February of 2021 on space. Let's see. Good afternoon. I wonder how's the weather down in Melbourne right now? It's 85 right here. Absolutely beautiful day in Austin, Texas. 85. It's not going to be that way tomorrow. It's supposed to get back in like the 40s for highs the next like 3 days, which stinks. But I mean, taking advantage of these days, it is a beauty out there today. That's why I moved here. Let's see. Maybe a few mistakes today. Happy got the dip on TQQQ. Yeah, I mean, that's been the kind of the moral of the story. Everyone's been making. Oh, I feel like there's been a lot of people making a lot of mistakes, and a lot of people have a lot of seasoned traders who've been around for a long time are just struggling with the market because of how things aren't correlating. Again, like I was saying, I think it was yesterday on a live. I forget when it was. Maybe it was yesterday's live. Which, speaking of that, make sure if you guys are new coming in, just subscribe, hit the thumbs up button. That's all I ask. Thumbs up button. Just hit it, smash it, whatever you want to do. That's it. That helps out like a ton on the videos, streams, and stuff like that, which is all I ask. We were talking about We're talking about how the correlation hasn't been there in terms of like fund managers. What's why you've been seeing, you've even seen like Kathy Wood getting destroyed. I mean, obviously, like, she's been around for a while, has a pretty decent, history. But then again, she'll come on CNBC. It's not like her stuff is a mystery. Like, oh, what's her strategy? Like, we all see her strategy. She's doing it every day. It was brought to light the past year. But she's getting killed. I mean, she's getting destroyed. So just like a lot of other funds and a lot of other people are getting killed. I think what we're looking at now is we were in a period of time where it was like just buy the index funds, no individual stocks, because they went up, they were more reliable. Yeah, some stocks did much better, but it was honestly just index fund environment. It's very possible we can go into a period of time where that's no longer going to work, right? Where the market chops around and your average return of 8 to 10%, 8 to 12% is no longer going to exist. And you got to be kind of a better picker in terms of picking your stocks, picking your sectors, picking, picking things that are heating up and being there before the crowd and not jumping in at the end of the party and stuff. But a lot of people, again, have struggled as of late because we haven't seen a correlation, kind of like we have been, where, okay, everything goes up or everything goes down, or it's very much, okay, this is going up, these are going down. It was kind of like there were certain things that were up, certain things that were getting killed, certain things that went with the news, certain things that didn't. And it was like, okay, it's been kind of a wild west. Speaking of that, though, Exxon Mobil is one that's been, wow, look at this. I didn't even think. This got killed. This would have been an amazing short today had you been following. I must be because of oil. We'll look at USO in a second. But Exxon Mobil opens up over our trend line, but now it's right back below. So this has got some serious, I've been saying, I think we're going to see sub 75. And what did we get today? We got just to 75, like 30 something. We're probably going down to sub 75 if stuff cools off. I would say in Russia a little bit here, like kind of cools off this week, and we'll see how it goes. I think we're kind of cooling off on this stuff. So this is an interesting one. Now, okay, the market was down. Did that help? Probably not. It definitely sold off a good bit with the market. Let's just see what USO did. USO kind of did the same thing. It opened up and slowly kind of fading off all day. Here's your downtrend on this thing. So yeah, Exxon Mobil is kind of playing a game of like oil goes up, it goes up, but if the market's super red, it will go down, or it's going to have that downward pressure. And so if oil goes down and the market's down, Exxon Mobil gets killed. That's what has been happening. So look at SPY. Look at that little bounce right there. Pulled back a nice bit off the highs. Now has bounced off of the low, off that little pullback. Here's a look at the daily chart. I mean, you're talking about a doji. If I've seen one myself, that's a perfect example of a little doji. We kind of had this is how it's been on these big drawdowns down to these lows. Whether you like it or not, we get these big snapbacks. It's honestly been funny because I was kind of expecting more of just kind of like an annihilation in either direction, to be honest. Either the longs get killed here or the shorts. It's kind of worked out in both favor if you're a little more active on your trades. Like if you're more active in how you're managing things, I felt, and this is somewhat of a bias, I guess, that I was just wrong about to a degree, I was like, hey, the more people we keep getting with buying puts, that put call ratio is popping up too much. Everyone's bearish. How are we going to just go down? Like, how are we going to go down in a big fashion? And it seems like, we honestly didn't go down in a massive fashion. So I guess we didn't. Those puts were pretty expensive. So if you're managing your puts properly the past couple of weeks, as buying puts into resistance and selling on these flushes, selling on these big down days, you're probably doing very, very well for yourself, or hedging your downside very, very well on your longs if you currently have longs and whatnot. So kudos to those who have been taking advantage of that. I did early on, and then I was like, well, I don't know how much lower we're going to go. I was in at least for the first couple of these red days back in January. And then I missed ultimately like the worst of the days. But hey, a hedge is a hedge. So you can take advantage when you can. And you're not trying to nail the bottom exactly. Pretty nice. High 70s today. Very nice. Very nice in Florida. I think it's added close to a bottom. You see bought TQQ ARC. That's the thing I've been saying too. I mean, really, honestly, people are making fun of her. When people are making fun of her, I mean, it's like, come on. I understand everyone can have their fun, joke around. She's getting killed. It's funny. I'm doing better than Kathy Wood. I get it. It's funny to say that, but then to some degree, if you're shorting her fun now, you're honestly, in my opinion, it's idiotic with any size. If it's a hedge against your longs, let's say you have longs or you have her, ETFs and you own them, Okay, great. You're hedged. You have a nice hedge on that, and that's fine. But you could buy, they have SARK, SARK. This is the inverse, I believe, of Cathie Wood. Yeah, SARK. So you could buy this, which is essentially the inverse of ARK. And you can play this at the backside. So this goes up and ARK goes down. So it's funny how that was created. But now let's take a look at her. Is she up today? Oh, she went green. So I guess because she got some Roku. She must have been buying Roku pretty heavy today. She went green. Look at that. So some of her stocks are actually having nice days. I mean, how much is Roku? It must be a decent size position for her, right? It's up 12%, which is pretty impressive. And the market's kind of come back a good bit. Tech's only down about, between 1.25%. So I guess it kind of makes sense. But she went green. Cathie Wood went green on that so far today, at least after what it looked like earlier today. She hit new lows and then went green. Realty Income. Oh, how is that doing? Where is Realty Income set up? Let's take a look. I love this stock. Oh, it sold off a good bit. Down towards these lows, 65. Yeah, I mean, this thing is... What's that dip? Look at this chart, though. Ultimately, it's been really, really nice. I love Realty Income. Pays a monthly dividend, 25 cents a share. I mean, it's a beautiful one to have in the dividend portfolio. And they actually raised that dividend the past, a year ago. That's pretty nice. That's nice. Earnings coming up, well, that's going to be, I don't see a massive, reaction coming off this thing, but it could very well sway it, up or down a good chunk if we get some notable beat or miss off of that. So we'll see. So the Exxon puts too early still. Hey, there's no problem taking. Hey, if you made profit on it, hey, it's not a bad thing. The thing with Exxon Mobil, though, is that the margins here, I don't know are how big you're going to have. Like how big of a downside move are you going to get? Yes, historically speaking, right? Every time this thing gets up over $80, it comes down under 75 in a matter of a few weeks. But, if you have puts around that level or priced around that target zone, and this thing comes down and it's down below 77 and it's now slowly kind of bleeds out. Oil kind of stays elevated but doesn't die and it holds up pretty well. And this kind of bleeds out a little bit and it only goes down to 74 by 2 weeks from now. It's very possible. So you got a good chunk of the move. I think we'll get a bigger move down possibly. This comes back down maybe towards $70 realistically. But no need to be, pissed about taking profits, right? Ideally, right? So it's not a bad thing if you're taking profits on something like that. Believe Cathie's underrated. I think that she's going to... Oh, DraftKings too is helping. Let's take a look. I think I just looked at that earlier and it was green. Yeah, 9%. I don't know how large of a holding. We can check. I mean, might as well just check because I have a link to that. Let's check on the news really quick. Kremlin did not watch Biden's speech in Ukraine. Putin has a working meeting now. Okay, not much there. I have... What do I got? Where is it? Lucid tracking. This might take a second to load. But I have, what's going on here? Yes, I will go. I'm good. So I'm going to jump into this and see what percentages and stuff and weights. I'm sure you can look at it on her website too, which is another way to go about it in terms of Cathie Wood and what she's holding up and how that stuff's going. But what are the biggest? I know Tesla's her biggest player. Where's Tesla? How's that doing today? TSLA. Tesla it's down 3%. The Tesla's actually kind of in a, interest. It's still down a good bit. Tesla right into that 800, right off the 800 today. Very nice bounce off $800. Potentially looking like it might close right at or right under that 200 moving average, which it hasn't done in a while. It kind of hovered around it for a good bit in 2021, I guess. But this could be a good zone for Tesla for a bounce as well. If the market kind of holds up here, I wouldn't be surprised. All right, this is taking too long. Let's go over to ARK Invest. I do want to see what she's holding and exactly what are the weights. Why does it seem like this site is too big? I'm at 70%, 75%, and this is it still seems too big for my screen. Let's see. About ARK. We want to go to the ETFs. Oh yeah, these are the different strategies that they have. Explore the ETF. Here we go. Holdings, please. Boom, there it is. Okay, so Tesla, and this is, oh wait, what is this one? This one is ARK-K. So this is ARK-K is the one we always like talk about when we're talking about Kathy Wood. She's got a bunch, but this is like the most, I guess, well-known one. Where is it? Here's the list. Okay, so Tesla's the number one in terms of weight there. Teladoc, I wonder how Teladoc's doing. That's number two. I'm not sure. I mean, I guess. I'm not a huge fan of it. Okay, that's up today. So Teladoc is up today. Makes some sense why she's up. Teladoc's up. Zoom, Coinbase, Roku. So Roku is up there. It's got about a 5.67% weight. That's a pretty big weight for, and so it's up a lot. So it makes sense as to why she's up, because Roku is up. If Roku was like a 2% weight, I wouldn't really, care. I wouldn't really think it would make that big of a difference. But it's Roku is like the top. It's the top 5 weight in her ETF. So it makes sense on that. So yeah, okay, makes some sense why she's up today. Those are her top 10. I guess you can get the full holdings. Let's pull it up. We may as well. I wonder if DraftKings is in this. DKNG. Yeah, DraftKings is number 16 on the list, a 2% weight for DraftKings. I know it's like super small. DraftKings is a 2% weight on that. Spotify is in there. I didn't really even realize that. Block, so SQ is in there. That thing has gotten killed, by the way. Let's look at SQ. Block. 96, hit new lows, hit 93 today. Hit new lows. So a lot of these charts ended up playing out as bear flags, where you have this big move down, or at least they seem like they are. Maybe there's a trap coming, who knows? And they got this like flag pattern consolidation, and a lot of them broke down through the bottoms of those flags consolidations and hit new lows today. Now, is that going to be the ultimate fake out and we rip back up from here? Or is that going to get continuation? Is what we'll have to see. All right, so SPY is holding above VWAP to the end of the day. I would be honestly pretty impressed if SPY closed right here. That's pretty strong in my opinion. Still got about 40 minutes, so honestly it could go green for all we know at this rate, which is the way it's been. The beach was nice today. Oh, man. That's one thing I do envy, right? I don't have a beach nearby. It's like 3 hours away. And even that, it's like Gulf Coast. It's like, I don't know. Texas beaches, I feel like I haven't gone. I have to see, but I don't really have high hopes for Texas beaches. I know Galveston's a nice area. At least I know there's some areas down there that are nice, but I don't know. All right, Labu, let's go back to check on this. Hit new highs on the day, which is impressive. I mean, that's pretty impressive to me. Hit new highs, now it's pulling back. It's still up 2%. Here's the chart on this guy. Didn't go to the lows, so again, it held up better than better than a lot of things as of late. Outside of Labu, there were some SCAC. Let's jump back. I want to just jump back to some of the stocks from last week, some of the small caps that we were watching. I mean, I have them written down here. Because they were kind of holding up pretty good last week. CSCW, something happened. It must have been an offering or something. This got destroyed, down 50% today, which is the risk of holding these things too long. So that was the downside there. SOS. Let's take a look at SOS. This was one that was up. You know what? This is not bad. As this is down. It did go down 10% today. This isn't, you know what? I like this idea. I like SOS right here. It's holding up. It's building higher lows, right? 75 cents is your risk. So yeah, you are going to risk a good chunk. I wouldn't go super heavy. You risk about 7 to 8% from where we are right now. But I think you have a legitimate shot. This morning you hit up to 96. You got a legitimate shot if the market doesn't implode of a 15 to 20% or back up to or up towards $1, maybe even $1 plus you can get. I mean, EBON is a similar sector play that had a big move recently. Here's EBON. Here's the daily chart in EBON. It's pretty nuts. From 70 cents, it kind of grinded up and it hit up to just shy of $2. So SOS, I like that chart as much as I may not like the stock, and the company is sketch AF, really. But this is something that I kind of like that setup. I can't deny that. So I like that. FAMI was one that we're just noticing on the bottom. I think it's down. It's down towards the bottom here on FAMI. So, I mean, it hit new lows today. I think there's a lot of scare behind possible reverse stock split and all that stuff, and who knows. I'm not a huge fan of that chart other than just buying a bottom there and playing for that possible move, but it's, again, risky. FTK, here's FTK. I kind of like this chart too because FTK is literally just holding up. If this doesn't go below 125, I like this a lot. Now it's pushing up into the close here, but I like this play. I do. Risking yourself about 12%, so a little more of a risk to the downside than SOS on FTK. But I like that. I kind of like that setup. Again, it's very similar to SOS, and it's very similar to what has been working. I would say those are the two that I'm going to circle these two, SOS and FTK, and we'll watch them the next couple of days. We'll watch how those play out. But again, I think it's just literally just confirming the same idea of what's going on in terms of the small caps that are popping. VTVT got rejected by the 50 SMA. Watch this one. It's got some good volume. It had good volume last week on Friday. Watch it. If it builds a higher low here and doesn't drop below, like, again, roughly 75 cents or so, that could be a spot to look for an ad on that guy on VTVT. But SOS and FTK I like the most, to be honest, in small cap land from a momentum swing. No, I'm not going to get too greedy on that. Momentum swing, I make 10, 20% scaling out. So antsy to buy right now. Yeah, I mean, we very well, look, here's the daily chart. We very well could have a ripper tomorrow or the rest of this week. And you see how it went when we got back to this zone. If we repeat the exact same kind of pattern and do like more of somewhat of a double bottom, and we bottom out in the same spot that we kind of bottomed out back then, look at how it took 4 days to go from pretty much closing here, 5 days from closing at 431 to closing at 457, a 6% move in the S&P in a week. So you can get, this could happen fast. It's very possible. We can, a 5% move back up and you're back up into that 450, 455 range, maybe in 460 range, 458 are those highs. It could happen very, very fast. So, it's tough to play that, to exactly get to play it, but the key is going to be the continuation, right? That's where you're going to make the most money off of individual stocks. Yeah, you can play the SPY and you can play QQQ and stuff, and if you time it right, you're awesome. But the way that you're going to make a lot of money, ideally, is we get continuation on SPY, QQQ, then you go and find those stocks that when SPY's up 1%, that stock's up 5%. And you go find a couple of those, or you have a couple of those on your list, and you take advantage of a couple of those, and you get some continuation behind those. That's when swings are fun. That's when we get some really nice price action. That's when, you can do very, very well to the upside. Now it's just this whole time has been a great lesson of learning how to take advantage of the downside for those who haven't been at least accustomed to that. And there's nothing wrong with it, at least in my opinion. There's nothing wrong with shorting. If you're literally either hedging or you see the better risk reward, you think a stock's can go down, okay, then you can make money both ways. You don't have to just make money on the upside. Just bought some Labu. Yeah, hey, I like it. I like it a lot. I really need one of my swings to hit, like one of my small caps to hit. I'm just waiting on that, man. I really, it's been the longest time now. Okay, the market is the market, right? So obviously that's part of the game, but it's been the longest amount of time that I have gone since back in 2019 of really getting into the swings in small caps, of playing them where nothing that I had been holding had any relief pop, had any news pop. They've gotten news, but they haven't moved. So, that's just a part of the market, right? That's why I consolidated that list down a good bit to like 4 names or whatever. But ideally, I would still like some pops, take some profits off on those pops, and then, we can hold for a little bit of a bigger move if we get that continuation or get some, some nice follow through, but we have yet to get any of that action across any of those names that I have. Maybe it's coming soon. They have slowed down. I remember some of those names were down massive. I remember, we were down a few months back in November. I remember, market was down 1%, 2%, maybe one day, not even something like that, 1 to 2%. And I look at my stocks and they're down 5, 6, 7, 8, 9, 10. I'm like, holy sheesh. Like, but that was the market back then. And now you're seeing the market down 2%. And now they're not doing that. They're going down a couple percent here and there, low volume sell-offs, but you're not getting the panic sell. And to me, that just tells me, okay, there's nobody here. There's no panic sellers left in this stock. retail has been flushed out of a lot. At least some of the names I've been watching, they've been flushed out completely. And I thought I was buying the bottom or the lows. I was buying the 52-week lows at the time, and they still went lower. So that's been fun, but it's been a great learning experience, I think, honestly, for that. Look at DraftKings. This has been nuts. Look at this. This thing had a really nice move off the open, consolidated all day above VWAP, and look at that, extending into the close here. It's just touching 19. Look at that. Very nice. I wonder if Penn's following suit at all. Penn is not really, but it's up. It's pushing up a little bit. But no, I'm happy for that because these two stocks were trading too much like in tandem, and I wasn't really a big fan of that because I was like, these are different. They're similar companies, but they're different companies, and they have different numbers, and they have different they're fundamentally different, and I was not a fan of them trading side by side. For sympathy plays, it's nice, and you can go play both, but I just didn't like how that was working out. I wasn't a fan of it, and I'm glad that they're disconnecting now. They're their own things. They're going to have their correlations and stuff, but look at this. Also, OCGN, by the way. Let's write this one down. This might be. I'm going to write down again. Refresh this list of small caps that we like that are actually holding up pretty well momentum wise. So SOS, FTK, and then we have OCGN. I'm going to write this one down. I shorted OCGN on Friday afternoon, which would have actually I made a few bucks that day off of a few day trades, and I shorted this thing Friday afternoon. From like 510 average down to the VWAP and then down to the flush to 450 or so. I could have got this thing even down under 4, but it's actually held up, honestly, all day. So let's see how this plays out the next couple of days. But if this thing doesn't die, it's going to probably be very similar to Hook. Here's Hook from a few days ago. Look at this thing. Hook consolidated for a while and then eventually it's still doing it. It's still holding up. Hit $3 today. So OCGN, I'm looking at that as like this could be very well the next Hook, where it just kind of just holds up and doesn't die and squeezes out. It's one of those stocks as well that has a decent amount of shorts, I'd imagine, in it. Because I went to go short it, so that means that there's probably a lot more people than me that wanted to short it on Friday, and that are probably shorting it today. And it may very well come back down, in the coming weeks. But in the short term, it's very possible this thing kind of holds up. Short interest, I haven't really looked too deep into this at the bottom of my screen. It's like kind of cut off. I really need to do a better job of making this bigger. Okay, so what do we got? It doesn't seem like we don't have an update on that in terms of short interest. This is expired out through last month. It's going month by month, so it's not really that helpful, at least right now, in terms of that short interest chart. But you can use other platforms for that stuff, and you can even use FinViz for short interest. We can look at that in terms of short percentage of the float. Let's go look. Where's FinViz? I know here we go. OCGN. Zoom in on this guy. What do we got? 28% of the float is short. Yeah, this is setting up. This could set up for a squeeze, I think, for sure. Let's see. I like this one as well. I really do. Now, of course, before you jump into any of these things that are momentum-based small cap swings, you want to make sure you look into their recent earnings. How strapped are they for cash? If they're super strapped for cash, they have an S3 on file. They recently file an S3, a shelf offering. If that's the case, then it really throws off the risk, and it's maybe not worth it. If not, if things check out, these could be some nice plays. And even if they are strapped for cash, sometimes they run anyway. So, sometimes you miss them. It is what it is. But you don't want to be the last one there and the last one buying before the offering. But if you can get a chunk of that move, that's all that matters, the way I see it. So I like this, the way it's setting up, to be honest with you. And I feel like it's one of those where everyone kind of wrote it off, and it's just kind of slowly creeping around. It's creeping. And this, before you know it, could be back up to $5 in a hurry tomorrow or this week or something. So we'll see. Okay, SPY holding up the VWAP for now. A little bit of pressure there, but it's holding around that 431 is your support for now on SPY. Palantir. Let's take a look at Palantir in a second. Small caps I have videos every single Saturday. We go into the portfolio. So the portfolio has not changed the past couple of weeks in terms of the core holdings and small caps and stuff like that. So that's all there. I talk about those in those videos. But on the surface, it is NSPR as one of them, NVOS, VISL, and SONN are the 4 that I have. Palantir, we can look at optimistic. I feel optimistic about the future, take advantage. Yeah, I mean, that's I think this, to be honest, I think that a lot of this factored in a ton of bears really kind of piled in, and it really kind of threw off. I'm not saying threw off, but it really added some bearish sentiment right now in the short term, which could fuel a really nice rebound trade or a really nice bounce back trade in the next couple of months. So I see it. I matched my SPY June call with an IWM 250 June call. Look at that. Let's take a look. I mean, IWM is, I like that. I like it, and it could very well outperform SPY in the coming months. I like it. It's going to have some strong resistance here around this 210. But yeah, I mean, this thing gets above that. This can have a really nice bounce back move. I like that. I like it. I have 5 of those SPY calls, so it's like $500 in roughly. Let's see. Yeah, I think I might average like 120. Yeah, it's actually higher than I thought. It's 169. I probably could add more, but I think I sold one of these. I did. I definitely did. I sold one of these up around like 290 something one day. So my average being 169. I think I bought it back in the lower 2s. So maybe that's why. But I originally started buying this thing in the 1s. It's a sub $1 now. You can get even cheaper. But I mean, look at how fast this thing moves, right? This thing in December, really just in December, late December, was at $11. If we did come near all-time highs again in the next 2 to 3, 4 months, which you might think is like, no way. It's very possible that could happen with how fast things have moved up and down. Then these could be back up to $10 per contract, which would mean that this position is worth, what is that, $5K? So from, $500 to $5K. I mean, obviously I wouldn't hold the entire way up with all the contracts, but that's nuts. It's very possible that I could do that. Let's go back to this SPY. It's holding up. It's down about 0.7% or so, 0.75 points. Yeah, the movements have been wild. I have a potential new broker that I'm going to be looking to get into. We'll see. I think tomorrow I'll be talking to them, Interactive Brokers, and looking and getting some more information on them. It's one of those, Interactive Brokers and Trade Zero are the ones that have been like my 2 that I'm like very highly contemplating shifting, a decent amount of or at least shifting at least making that like the day trade portfolio. We'll see. Webull might be more like, long terms and stuff like that, and swings and stuff. And the day trades will be in one of those platforms. So we'll see. We're at least going to give it a test relatively soon. So we'll see how that goes. I really ideally want to get a platform that I can short more, have more availability to short anything I want at any time. I don't care what the fee is going to be. Obviously, yeah, there's going to be hard to borrow rates and stuff. I don't really care if it's going to be a day trade. Doesn't matter. If I see an opportunity, I want to be able to take advantage of it. So that's kind of what I want in that. I don't want to be restricted by you're not allowed to short that stock on Webull because it is Webull, whatever, or there's no availability on Webull anymore, but you could get availability somewhere else. That's what I want to avoid, just so that it doesn't make you think like you can't do this if you see the opportunity, in a sense. Palantir. Sorry, let me go to Palantir. This thing, the problem that I had, it's down to $10, 10.30, hit 10.30 today. The problem that I had with this stock is that it was so heavily retail crowded. It IPO down here we're getting down to the lows. So the lows of this thing were down towards $8.90, $9. $9 or so could be your next level of support. We're kind of in between key zones of prior resistance and support. So that's where we're kind of at. We're in between. If it gets back up over 11.50, that's a good sign. If it can't, then $9 is my next area to watch. On Palantir, but it was such a retail crowded stock. There are like nothing against these guys, because I see them and I see this stuff all the time. I don't really watch this stuff or pay attention, but there's a lot of channels or people who just make these videos and have a cult following behind some of these stocks. And Palantir could very well be a great stock in the next 10 years, a great company. But again, right, when you have so many people in the stock all buying the dip every time it dips, you're going to get pressure. You're going to have heavy pressure on that stock, whether that's shorting, whether that's funds, or whether that's people who are like, I can't hold this anymore. I'm down. I got to get out. And they panic sell. And then any pop you get is your opportunity to get out, right? If you average down, bought the dip, and you get a pop and you get back to break even, well, what are you going to do? You're going to get out. That's just human nature, right? Everyone, as much as you looking at sound investing over time, that's not what you do. But if that's just human nature, right? So that's the problem that I have with it. So it's going to take some time to kind of get back. It could definitely do very well, but the problem it's going to have is it's going to have to work through all those people who, were in from 25, who bought the dip all the way down. Now it gets back to $20 and that's their average, and they're just shedding shares because they're breaking even. So you're going to have that fighting on the way back up on Palantir. But again, this is one of those stocks I would say that, if you like it, if you've done the research and you like it, it's when toss in the IRA, toss in the long-term portfolio and just forget about it. If you can invest $10 a month, $100 a month, $1,000 a month, whatever the number is, toss something in and, you're stashing away. That's how ideally, realistically, how you want to do things as a trader. I'm not sure how everyone feels in terms of those who are like, it's like day trading is your only profession, right? I guess. Your only thing. But realistically, the way you'd want to do it, hopefully that's how people think. I don't know how. A lot of the traders is that they don't think this way because they just trade. They don't think about investing. They're just traders. But realistically, if you're a profitable trader and you're making money, and obviously that income can be scaled up, you take those profits and you start rolling them back into long-term investments. So you make $100 or you make $200 or $500 on a day, and you can take 400 or you can take 250, you can take half. And you can toss it into, Palantir at this point and stash it away and forget about it for a couple of years. Put it in your IRA. Forget about it. Ideally that's how you want to do it. But we'll see though. Ultimately, I would hope that's what people think, but nope, that's a cash flow machine. If you can cash flow consistently off of trades and then funnel that back into long-term investments, you're building wealth or other investments, real estate, whatever. That's the real killer in terms of a sound strategy and plan financially. Open up an E-Trade. Yeah, E-Trade's probably good too. Honestly, it's another one I can think about jumping into. Almost bought Palantir at 15. Don't know much about it, so I didn't buy. Yeah, and I would recommend if you're going to buy something like that, if you're playing it for a trade, you don't necessarily need to know how much about the company. You have your risk in line. Okay, I'm going to risk it down to this level, and that's it. I'm going to target this level. I'm going to trade it. Or you're going to play it off of investment, and you're going to buy it for the long term, and that's it. And you're going to kind of let it do its thing. Most long-term investing here. Yeah. So, yeah, I think there's a lot of people who, the problem I think people have is they try to do it all in one. And I've learned this firsthand too. You try to do it all in one in the same portfolio or at the same exact time. You gotta separate things, separate your head, right? In terms of, okay, I am doing this, right? I am investing in this stock. I don't intend to sell Palantir for the next 5 to 10 years or until earnings tells me something has changed fundamentally, and I don't like this. This company is not progressing at the way that I thought it was going to progress, right? That's the way that you can play it. And that's what you do. But people start jumping in and they start buying Palantir, and then they start selling Palantir because they are freaking out and they put too much in too fast, or any stock, Facebook could be Roku, could be Zoom, could be Cathie Wood's ARK. I mean, same thing. But yeah, you see how that plays out, and then it ends up being a recipe to lose a ton of money. That's what it is. SPY cracking below VWAP a little bit right now. A little bit. Pretty impressive. I'm impressed with the recovery we had as it is. It got back up to pre-speech sell-off. So we did exactly what we kind of, what I was saying before too. We had this move, opening, push up, pull back, push up, pulled back a little bit, kind of consolidating right around this 431 for a while. Then the Biden was going to come speak, and so everyone was like, oh, waiting for Biden to speak, and they're selling because of worried about, okay, what if he says something bad? I don't know. He speaks, and nothing really comes out of it that was unknown or that was new, and then the market rips back up, and now it's, right back to where it was pre, sell-off, pre-speech sell-off, Same thing with the Fed. It's the same stuff. The Fed comes out, or the Fed's going to, release their minutes. Everyone's like freaking out, panicking. It's just chopping along. We get some sell-offs beforehand, and the minutes come out, or whatever happens that comes out, and there's nothing new, and the market's like, oh, hey, and it rips back up. So it's the same thing. If you get something different that happens or something new, then that's where you get the downside. So profits from any short term goes into Apple, VOO, and QQQ. There you go. That's a strategy right there. That is a sound long-term investing strategy. That's how I think a lot of people should think of things, but a lot of people don't, unfortunately, which is, their loss ultimately. But my only concern is going to be the next couple of years, how that works out in terms of how does index fund investing do versus individual stock picking. It seems like, we had a period of time in the past year or so where you're probably better off just tossing into an index fund, and you did very well. Now versus individual stocks, I'm kind of curious how that correlation goes in the near future. Let's see if we got anything else news-wise out of Russia or whatever and see. Nothing there, nothing new. At least so far, nothing new. All right, well, let's take a look at this. This is actually what I want to look at too. Advanced decliner. So 28% of stocks advancing today, despite the downside. That's pretty impressive. I think it's decent. Almost 1,000 stocks hit new lows. Now that makes sense. I mean, you look at a lot of charts. A lot of stuff hit new lows today from what we were looking at earlier. So that makes sense. 76 stocks hit new highs. Some energy stocks probably in that bunch, I would say. 25% of stocks are above the 50 SMA, and 25% are above the 200 SMA. So same deal there on both of those. So I'm not saying those have been kind of in line the past couple of weeks. Let's see what we got out of this list. So Tesla's down a lot. Home Depot's down a lot. Lowe's and Home Depot are getting killed. Let's see. Travel services are getting killed today. Or not really killed. They're down 3%. Okay. Airlines, compared to that, how is airlines doing relative to travel services? I don't think they're down that much. If not, they're actually up. At least some of them. Let's go look at jets. Take a look at jets. Jets. No, this is down. Okay, so this are down. All right, I thought they were up for a second, but I guess not. Boeing is down a good bit. Some banks are up a little bit. Some of the banks are up. Some other banks are down. Regional banks are up. Diversified banks are down, I guess, if you want to classify it that way. Some metals are down. Specialty metals, it's kind of chopped. Oil and gas, a lot of that's down today, which is funny. A lot of that move, I think, happened the past couple of weeks. We'll see how that progresses, but I wouldn't be surprised if we topped out short term on some of these names in the oil and gas space sector, or whatever you want to say. Let's see how this. Okay, SPY's back down a percent, so we're giving back some of the recovery that we had this afternoon, but honestly, still, very nicely elevated off, about 1% off the lows. So SPY was down to this level. Yeah, we're about at 1% or so off of the lows, which is still a nice recovery or a nice bounce intraday. With about 15 minutes to go until the close as we speak. Put some of the day trade profits into AT&T. Let's take a look at AT&T. T has been let's look at this chart. It's been down a lot the past year or so. It's down a good bit, but I guess not as volatile as like your Palantir, right? We were just looking at for a stock in that same price range over the past year. Down 20%, but they have a nice dividend though. You're gonna get, what are you getting? You're getting 52 cents a share. That's pretty nice. Not gonna lie, that is pretty nice. If you like those cash flowing dividends, like we were saying before, Realty Income. Realty Income is that monthly dividend payer. Now they're gonna pay you 25 cents a share every month though. So okay, dividend isn't like massive, but it's a monthly kind of cash flow you can get, and if you have a decent chunk of change in there, it's kind of nice to see that come in, and you can reinvest it and keep building it up and let the interest compound, and that's really kind of a cool way to compound your gains. At least one of the stocks you can take advantage of. AT&T. We're talking about Walmart. I think Walmart's got a little dividend as well. What's Walmart's dividend at? Last dividend was 55 cents a share. It's a $136 stock. This is an interesting one too. It's been kind of, actually, we got a downtrend to draw in here on Walmart. Look at that. There's your downtrend on Walmart. So we actually have, here's a little bit of a possible descending wedge developing here on Walmart. I would like it a little lower. You get this thing down in the lower 130s. This could be a really good risk reward play. And it's been, honestly, Walmart has been in a consolidation for the past like year. Yeah, more than that. You know, you're kind of in this consolidation in the past year from like 125 to 150. So a $25 range, it's not that big of a range, right? It's about a 20% range. And that's even from the lows to the highs. So realistically, like, you know, right now it's not a big range. Not too volatile of a stock, and they pay a dividend. So that's another one to think about adding into a dividend portfolio or something like that. That's Walmart though. WMT. I know it sucks because of the lives. It's like I can't add the ticker symbol bigger, but it's up in the top right. I know it's up here. It's like it's unfortunate that it's this small, but it is what it is. I wish I could like. Maybe I haven't figured that out, is to be able to like increase the font size, but I don't want to increase the font size everywhere. I want to increase the font size on just the ticker quote, but like, I guess you can't. SPY coming in here. Look at this. SPY dropping a little bit here. No, that's a pretty substantial pullback in the past 15 minutes. So 15 minutes ago, we were up here towards 431, almost 432. Now we're down to 428.75. Pretty big pullback there in the past few minutes. Few candles. Not seeing any news. Let's just see if we can go find some. Not seeing any news at least now. Nope, I don't think we have any news additionally there. It's gonna be a lot of interesting. There's a lot of sentiment to work our way through. I'm actually curious. I wonder if we got any new tweets from David Hunter, because he's the one who's been calling for the S&P to go to 6,000. No, it doesn't look like it. I guess not. Mr. Meltup. But he likes this here's his forecast, 6,000 on the S&P. He likes this. I saw a chart. Let me see if I can find it. It's somewhere in here. He really likes this, how bearish people are, all that sentiment, because it kind of just feeds his thesis for the melt up, which is interesting. It's gonna be cool to see how it plays out. I'm trying to find this shot. Maybe it got deleted. Honestly, it might have been deleted, but there was someone who posted a chart, and the chart was like the S&P, on the way to 6,000, like what that would actually look like in a chart, just based off of a slope of a line. And it was insane. I mean, we can do the math ourselves and just look at the charts here, you know, because he says first half of the year. So let's just do the math. Let's go to the weekly chart. This is the weekly chart right here on the S&P. So if SPY would go to $600, right? So that has to happen by like August, roughly, like July, August timeframe. Let's say it does. That means you're going to be looking at like a move like that. That slope would be the steepest slope we've seen in throughout the pandemic. Actually, you know, it would rival some of these dips, but it would be this period of time, it would be one of the steepest slopes we've seen probably in the market's history for the extended amount of time we'd see it. But that's his call. So let's see how this plays out. But that's pretty much, and I honestly, he says it probably can happen sooner. So it'd be something like in here, early August or even July. That's nuts. That would be nuts, but it's going to be fun to see how it plays out. Let's see. Put some of my day trade profits into TNT. What do you recommend for learning all of this? In terms of everything, I hope that's the intention, is that I hope that I have a lot of stuff already for free just on the channel in playlists and backlog through. So in terms of like getting a basic understanding of the market in general, I actually there is a video recently going over the stock market for beginners 2022. I have a technical analysis for beginners video 2022. There should be an options for beginners video. All that stuff, there should be videos. And if anyone has questions, and I can kind of gauge off of questions and stuff, I can kind of dive deeper into certain things that that I know very, very well. At least have a good handle on, right? So by no means am I some professional. Obviously, I'm 23, going to be 24 like in a few months. But But yeah, so obviously, like, I don't have the experience that somebody who's been on Wall Street for, however many years has, right? Obviously not. But I hope that that's like honestly, I think that's a good thing. It's a good different view of things. And also it's just a different perspective, because a lot of stuff these days is all like, you have everyone who's like saying or pushing their narrative of this and that and how it should be and everything. And I hope to be just bringing a different perspective and a different kind of take of how things are going, at least based off my experience and stuff. So we'll see. All right, let's see. We're about to get to the close. We have 5 minutes or so to the close right now. 6 minutes. It's a pretty big pullback. So we made a decent. Looks like we made some good progress in terms of where the market was going to close. Had a very strong push, and then it pulled back, and now it's back down 1.5%. And it's like, okay, here we go, back to where we were. Let's see where Labu's at. We're going low. We're dropping. Look at low. That's a pretty nasty pullback on that. Right back into support though on this. Building higher lows today so far. Right back into the $16 range of support. But this thing was almost pushing $17.25 literally like an hour ago. And now it's at 16. That's when you play a 3x ETF. You better be ready for that volatility, because that is what you're asking for on playing that stuff. How's UVXY looking? We can maybe snag something. UVXY, it's not as, I would love to get it higher, but then again, these aren't very, I don't really have too much room. I'm going to grab one more of these contracts right now. 260-ish I would want to be paying for this thing. I don't want to be paying more than that. 260. Let's see if I get filled on a UVXY put. Of course, now the market's going to bounce hard to the close. I'm not going to get filled. That's just how it goes, of course. Someone just pointed out FUBO. Oh, that got filled. It just got filled. Okay, we're in. So I got another one of those contracts. So what's my average on the puts out to March? UVXY puts, I have a 278 average. So this thing pops to 3, I'll take one off, something like that. It's probably how I'll play it. Or if we wake up tomorrow and the market's green by a good bit, I'll take off one of those puts and then let the other one ride a little bit. But I missed the opportunity, a few hours ago to add that at a better average. I could have added it here at like in the 240s, 230s, which would have been great. But I got 260. I'm not going to complain, to be honest with that. So I can't complain. Lobby right after I bought. That's how it works. That's how it goes. The thing pulls back right after you buy in. Everyone jokes about that. It's like, when's the bottom? Right when I go to puts is when the bottom will be coming in right here. So let me get on my calls and go into puts. And once I position myself there, then everyone else can go buy, because that's the bottom. That's how it always feels. OCGN, how is it setting up here? At VWAP right into the close. This is going to be one to watch tomorrow. I think this is going to be a very nice watch. The rest of this week, SOS, same thing. How is this looking up? Oh, it's pulling back into the close. Okay, SOS we'll watch. I'm going to watch tomorrow. It's on my list. If it holds 75 cents, I like it. We'll see, though. And then we have FTK. FTK is just sitting there, man. It's just sitting there at the 139, 140. And I like this thing against 125 as my risk. You probably have a good move, and it's very possible we can go to $2 if this momentum stays. So don't underestimate these moves on some of these small caps we can get. So that's where I will be watching tomorrow in terms of small caps. SOS, FTK, and then OCGN. OCGN, and FTK look the best to me, at least chart-wise. SOS, again, it's just selling off, looks like, with the market to a degree. I wonder where Bitcoin is. Did Bitcoin just pull back pretty hard? Let's see. BTC, USD, not really. Bitcoin's actually today, honestly, from this morning, has been building higher lows pretty much all day. So yeah, did it get hit pretty hard the past couple of days? Yep. It hit 44K, and then it has pretty much sold off past 5 days since then. But today has been a good trend day. It's been just building trend and building higher lows and doing its thing. So that is Bitcoin. We'll see. Let's see if we get the market to close up. Close down 1% or less. Let's see if we can get a little bit of a push into the close here. Down about 1% and 1.15, 1.15, yeah, roughly on the SPY. RGR dipping pretty good. Great dividend, good value. Let's say let RGR. What you got here on this chart? Look at that little dip right back into the prior lows that we've seen the past couple of weeks since November, really. So this is let's look at the weekly chart here. Yeah, this is a nice, it's a little more volatile than, let's say, your AT&T or your Walmart, seems like. A little more volatile, but let's take a look at that dividend. What we got on that dividend? 79 cents a share. Look at that. That's a nice, that's a juicy dividend right there on a 60-cent stock. I mean, a $60 stock, $65. That's pretty juicy. Pretty juicy. So today we have at least I have one green position in my portfolio, and that is NSPR. That is it for today, which is one of my small caps. But again, if you look at the chart on this thing, there's no volume. There's no candles. It's just like dots, because there's an order that goes through and then an order that goes through, and it's like up. You see, you kind of can see it. If you were trying to get in, it's like if you were to market buy or slap it with a decent amount of shares market buy, you might get filled way, way higher than where this thing has been trading the past couple of days. That's just how these have been. That's how it's been. But a little more Labo to finish out the day. Yeah, it's interesting. You know, we'll see what happens tomorrow. I honestly, a little bit of a nice, push up into the close, and then, let's see where we're going to close right here in a second. And there it is. Market's down today just north of 1%. So nice bounce back off the lows that we saw a couple hours ago before Biden spoke. After he spoke, market kind of dipped, and then it bounced, and then it dipped, and then it pushed up pretty hard. Hit up over 1% move off of those lows. Pretty impressive, honestly, if you ask me. But now SPY closing jack. Well, there it is. SPY just closed for the first time this year. This is the lowest daily close we have gotten on SPY today. Is the lowest daily close. Now, you may think to yourself, no, we actually didn't hit the lows. Yes, we did not hit the lows of 3 weeks ago, 4 weeks ago, whatever that was. We did not, but we have closed the lowest. The previous lowest close was at like 131.25. We closed today just under 430. I said one. I meant 431.25, not one. We closed just below 430. And then the after hours, actually, as we speak, in the after hours, it's pushing up about 0.25%. So it's back over 430 in the after hours, but that's just based off the first few seconds of the after hours action. So we'll see how that plays out into the rest of the week. But this should be a fun thing to watch and see how this plays out the rest of the week if we close even lower than last week, or if this ends up being the double bottom, bottoming out here and pretty much coming down to the same exact range and then bouncing back up. Don't underestimate how fast it can bounce. Again, if you're buying puts at these lows, just understand that, obviously you're playing for a flush through and you're playing for a flush down, probably down towards 415 or even lower on SPY. You need that type of move. If you believe that's going to happen, then you can play puts. But personally, right, we're at some pretty strong areas of support over the past year, 6+ months. So we'll have to see how this plays out. It's not an area that I particularly like shorting by any means, but we'll see. By the way, SPY is ripping it right now, actually. It closed, and now it's up about 0.4%. So it's at 431.25 now. That's pretty something. I don't see any news. Let's see. UVXY is pulling back. I don't see any news. Let's see if I can find something. No news as of now. So I don't know. It's been nuts. A crazy volume though. Pretty heavy volume day today. Into the close, not really, I guess, compared to last week. It's pretty much right in line with Thursday, Friday of last week. So not as much volume as we saw back at the dips that we saw, back in late January. Let's see. Overall, though, 435 is your new resistance. Okay, 435, and then after that, you kind of get into no man's land in my view. The levels aren't very strong after 435, up towards about 450. Then 450 is a strong level. Then 458 is a strong level. Down to support right now, 426 is a strong support. 421 will be the next level, which is the lowest that we saw this year. And then below that, 415 is the next level that I'm looking at. So that's at least what I'm looking at. That's a wrap. Oh, OCGN did an offering. Look at that. Just as we were saying, kind of like it, they did an offering. So OCGN at $4 now, falling down fours. It's pulling back. Honestly, again, that's why we always have to make sure you check, are they strapped for cash and whatnot. So that hurts. That kills momentum there. That probably that probably ends up going down to more lows, I'd imagine, off that offering. I mean, it hit 287. That's going to be a pretty big fall. But this very well possibly could just sell off for the next couple of days. We'll see, though. It could be a trap. Be very careful. I've had many opportunities or many circumstances where I've shorted an offering the second it came out. And then what happens is the stock bounced right back up and then pretty much consolidated and then eventually went higher. And I got squeezed out. So that's another possibility. I don't know if that's the case here, but they did an offering, so that's not looking good. They're down to 375 now. So that kind of nixes that from tomorrow's list. Pretty quick, which, that's one of the biggest, that's one of the things that I feel like I would do almost, and I know people are probably doing it. I would definitely do that, buy that thing today, and then get caught in the offering. I'm like, okay, of course. I identify a momentum-based swing approach for these small caps that's been working very, very well the past couple months, 6 months. And then when you take your actual action on it, you get caught in one of these offerings, of course. But we'll see how that shakes out. Back down towards 350 or so could be an area of support. That's what it was trading at before the news last Friday. But that hurts. That hurts if you're in. I understand. I have been there. I have been in many. I ultimately that's being an offering is what made me actually think about or maybe really dive into understanding fundamentals more for small caps and understanding cash position, looking into earnings reports. It was I have to do it. If I don't do this stuff, it's not, and really now it doesn't take me very long to figure it to just quickly look at stuff. You're going to be in a situation where you're going to be in more than those than you want, unfortunately. But that's it, guys. I'm going to wrap things up here. Thanks so much for watching. All I ask is a thumbs up on the stream. Hit the thumbs up button. Thanks so much again. And I think tomorrow I'll probably have more of an in-depth video on markets during war. That's the plan, unless there's some craziness, and we'll do a live again. And they'll probably do a live. Honestly, I'm thinking live Thursday, Friday is the plan for now. The last hour of close. Today, I jumped on a little bit earlier, but last hour or so of close is what I'm going to into the close. 3 p.m. to 4 p.m. Eastern is roughly the time frame. That's the plan.